It seems that there are quite consistent parallels between the stock market and the housing market. San Francisco is booming, in particular due to the rise in tech companies and their ever-expanding presence. Today we see tech companies buying up more office space in buildings. Tech companies, despite most of them losing money upon entering the stock market, are rapidly expanding their foothold into physical locations. This has been driving up prices in San Francisco to record highs. The rest of the US, however, seems like a completely different story. You came here for the truth, so let me unveil that for you. Today we're going to look at real estate. We're going to look at it from San Francisco to New York. I'm going to talk about the economy as well. A jam-packed episode, way too much to cover, but that's what I generally do. So let's begin by taking a look at this article out of the San Francisco Chronicle. San Francisco hit a record high price for office space in the third quarter, surpassing the previous peak reached during the dot-com boom in the year 2000. Now, when I look at this, I look at the stock market itself. A lot of tech companies seem to be the last safe haven, and it goes for real estate as well. We can see that as these companies like Amazon and Uber and Twitter and so on, they have these offices, they have their companies around Silicon Valley, around San Francisco in general, and that has been positive to the companies nearby as well. Okay, so we have this going on today. Now, in this article here, they're basically talking about how specifically the new offices, $81 per square foot, that's quite significant here, and surpassing the previous high of $80 in the fourth quarter of the year 2000 during the whole dot-com boom. We saw what happened then. Now, I would just want to interject the fact that I don't think it's the same as the dot-com boom before. This is much different today. However, I just did a statistic, I believe it was yesterday, that 83% of the companies that IPO, 83% of them are losing money when they IPO. That to me tells me something. But again, I don't think it's nearly as bad as it was during the year 2000 leading up to it, okay? But still, we've got a problem. This article is talking about the different startups that are here, Uber, Twitter, Airbnb, Salesforce, and so on. All of these companies are expanding. They need more office space, and of course, that drives the prices higher. It gets into the details of that if you're interested. That's one side of the story, okay? You could see clearly, San Francisco and the tech stocks are doing very well. Their businesses are expanding and so on, all right? So, other end of the spectrum and the other side of the United States, Manhattan home sales tumble in a market clogged with listings. So this is quite significant. It's going on now. Brand new information today that we're looking at. And Manhattan is a place that the rents, the last time I checked, were about $4,000 a month. All right. So there's some quite significant differences in between these two markets, even though they're both very expensive, both sought after markets. But when you look at it, residential property, you look at it even further broken down into detached homes, into condominiums. We could look at the industrial side, the retail space, the shopping malls, looking at the office space, and these have all factors that could correlate together, and they could be completely different. It depends, but I'm just going to show you some information that I found today that gives us sort of a perspective on what's happening right now. It's been a rough year for Manhattan's home sellers, and they're not about to catch a break anytime soon. In the 3 months through September, purchases dropped 11% from a year earlier to 3,000, the fourth straight quarter with a decline. That is quite significant going on today. Now, prices might be very high. I mean, we're talking about a place that is very expensive, no matter how you look at it. I'm seeing a lot of people that are basically trying to flee and going to a place that has less taxation, lower prices, and honestly, I don't blame them, okay? So many people have done this. Many people are leaving Illinois. They're leaving Chicago. It's just too expensive. The taxation is ridiculous, and they're fleeing for other places. Then you have the other end of the spectrum, where individuals have so much money, they got money to burn, and they're buying places for $100 million in Manhattan, okay? So it just depends on where you're at, but I would say that I don't think most of the people fit into that 100 million category. All right, here's a chart. More pain for sellers. Home purchases in Manhattan have fallen for 4 straight quarters. So this is the zero line if you can't see it from your screen there. But essentially what we have is in the negative territory. I'm noticing a trend though. It has been improving, but still we're in the negative territory now for 4 quarters. That means 1 year. It's an actual trend that has been going on. Okay, we can't just say that this is just 1 quarter and it always happens. There's always a blip, but this is a year now. So you've got a lot of inventory being built up here, and this needs to be taken into account. The inventory is so important, and I'll talk more about that here. More choices for buyers. Most listings for a third quarter in 7 years gave shoppers more choices. This is great if you're the buyer. It's not great if you're the seller. But of course, again, we see prices are already extremely high. It's not as if they've just collapsed, all right? Looking at this here, we can see what has happened with buyers. I can relate to it in Toronto. So I know, for instance, I spoke to a real estate agent that was telling me the situation probably about a year ago now. Things have changed since, but I think it's still almost as bad. When you would have to rent a place, this is the rental market, you would have to rent a place before seeing it. Now, how can that be? How can that be possible? What you have to do is go to see a place that you can get into, maybe a similar location, in the same building if this is a condominium. And that would give you an idea so that when you wanted to, you would have to, as soon as it came on the market, you'd be notified and you put your money right away. You couldn't even look at the actual place you're about to rent. That's how hot the market is. Vacancy rates are extremely low, and that gives the sellers a really big advantage because they're going to get their money right away. They're going to get the terms that they want, and they're going to be able to sell it for a premium. Okay, and that premium continues to be a premium, but there are rent controls in certain areas like Toronto that will hold the prices there for a lot of people. So that is good for some of the buyers, not so good for those landlords who maybe after a few years are starting to not keep up with the rest of the prices. This is a whole different story. Okay, but we have inventories building up, and inventory builds up and you still see the cranes. So the inventories are building, cranes are still being built, projects are being built. You're seeing people that are just investing, but they don't really know what's going to happen, just hoping that there'll always be more and more investors, okay? Then we look into different avenues. Rising shopping mall vacancies across the U.S. are driving down rents, signaling that retail centers continue to struggle despite the country's strong economic growth. That should be a question mark there. And buoyant consumer confidence. Question mark? Okay, so what I would say, number one, is the fact that if you're buying up all of this stuff with credit, I'm not talking about an individual who puts 20% down on their home and they intend on paying that off in time. I'm talking about individuals going to buy the new iPhone that's being put on their credit card. I'm talking about individuals who are getting payday advance, payday loans. I'm talking about individuals who take 8 years to pay off their car. I'm talking about individuals who take personal loans to go finance their vacations, who have to pay for everything in installments. If you tell me that's good for the economy, well, then we have a difference of opinion. But that's at a record. All of that is at a record high right now. So when you tell me that we have strong economic growth, we're definitely not on the same page. In fact, if I flip through this whole book, we're not even in the same book. We're not on the same bookshelf. And I don't even think we're talking about the same things. I think you're talking one language and I'm talking a completely different one. The average rent for malls in the third quarter fell to $43 a square foot in the third quarter, down a little bit here. Now looking at this, it's just a small amount, but with the vacancy rates being at 9.1%, we have to start worrying about that because it is definitely quite significant. When you can see that there's malls everywhere that are empty, that have abandoned stores, that are constantly, I know you probably have it in your area, there's a plaza store on the corner, that store, every time you drive by, there's a new store. It's a hairstylist one day, it's a convenience store the next day, it's a clothing store the next day, it's a jewelry store the next day, and you're just wondering, am I in the same town? Have I lost my mind here? But that's the way it goes. And surely this is, different businesses and things. Maybe the rent is too high and that they haven't adjusted accordingly. Maybe we've got other issues going on. There's so many factors, of course, but this is something that I definitely wanted to mention. There are different things here. We're talking about different markets, different places around. There are reasons why this could be happening. Definitely, there's way too many malls. There's way too many shopping plazas in the United States. That is a fact, okay? When you measure it against Europe, you measure it against even Canada and Australia, which do have quite a vast amount of shopping centers. Still, the United States is significantly higher. So that's one thing I wanted to point out here, okay? But I need to move on quickly before I keep ranting. Don't go anywhere. Watch part 2 of this video. I've got so much more to cover. I get into the issues that really break down what's happening. So just click on the link in the description and I'll see you there.